We're back for the third session in our series here. Today we're looking at harmonic pattern management strategies with harmonic pattern collection software. And we left off yesterday really identifying what we needed to know that generated an execution. It's an indicator value. It is the price level beyond the PRZ where that indicator triggers. And I think today we will overlap actually some of that material to actually clarify even the execution and how we handle it, because it's related to the management of every position. So we employ, though, a harmonic pattern management model. We've employed the identification model, and that's the pattern differentiation, although we didn't really talk about patterns in this course material. We talked about terminal bar, and everything we're talking about is related to actionable strategies. And so within that framework, it is a model like as well as execution, and we employ similar measurements. And again, those measurements, the measurement principles, it's the same for all patterns, and the management model again just kind of relates to the terminal bar. That's really been a lot of the shift focus of what I've been trying to explain to everybody, especially that the software does for us, and then puts our focus in that very small area, and I like to call that a defined trading realm, where the pattern completes, where the execution happens with confirmation. And then some of the individual strategies I'm going to show you guys today really kind of hammers down a fairly quantifiable zone within the PRZ, a tight area. So we'll look at that. I mean, it's the defined trading realm, and this is important because if we have a potential reversal zone, a pattern, okay, this whole area, this range, there's nothing outside of that range that we consider. So if our executions, our trading actions are within that relevant price time area, okay, that guides our decisions. Once we jump out of that, okay, all of our decisions are random. And that's important. So when I say, are we executing within the framework? Okay, we have to stick within those measurements. And we can relate that to exact price levels. So you know, if you're not executing at the PRZ or at our trigger levels and you're not hitting your targets, then you need to look at what you're doing. Let's jump ahead here, because I think it's really all of this is based on what I've been saying all along, is about the first principles methodology concepts. Okay, starting with those basic concepts of what it means to identify, execute, and now manage with the harmonic pattern strategies. But we got within that context, okay, that whole framework, we have to remember it's an imperfect process. It's statistically impossible to execute at the high or low of any move. But that then sets us up to understand our job is to utilize the patterns to take chunks of price segments. That's it. And that is, if you have a problem with, a bad trade, or not optimizing your profit, or getting caught in a drawdown and stopped out, it's all within that framework. Anything else is irrelevant. It's important when I talk about a couple of strategies later on, because everything is measured. And then you can look at your trades, and if your trades aren't, again, corresponding with the exact price levels, you have a problem. That's the kind of the truth of all traders. Can you stick to your plan? Are you adhering to those metrics? I mean, why are we doing all this analysis if we're not going to execute at those levels? And then we lay on top of this the management framework. We understand that, really how we have to respond to the market is a lot more precisely than I think a lot of people understand or even accept. The goal of our management is to close the position at a profitable price, any profitable price from the entry. That is the management goal. A profitable price, 1 penny, $1, $1 million, it does not matter. I will tell you guys, I had a trade on Friday. I had weekly call options in blink, and in a blink of an eye, they were I think the 45s and 46s. And that thing popped and then rolled over to me. It was a couple grand within 30 minutes. The goal of it is to get a profit in any price, and we're going to talk about management of why we have to protect positions. That was that was one of several, but Friday for me was really, there was a lot of things going on Friday. I'm going to get into it later in the session of some actual opportunities. I think you guys know some of them. I've been talking about some of the patterns I've been posting, Palantir, a couple of Riot blockchain, and we'll look at those a little bit later. But all of this is to pull profits, okay, no matter what. As we can do all the analysis in the world, our ability to capitalize on the patterns and what we do will improve over time. You are going to be sloppy at first, okay? That is, you have to accept that, and your experience will grow as you look at more charts. It's just that simple, and then you will be able to capitalize from the framework once you've had a few days, a few weeks under your belt. But again, the ultimate determination is simply to pull profits and be profitable. And we will talk about when to be aggressive, when to give positions more time today. But I say that to simplify the whole emotional framework where you're happy with any profit, you take profits, and you realize you're learning how to do that better and better every day as a skill, and you accept where you are. But that grows, and that's when we look at the measurement strategies today and how we execute off of that framework. It's important to remember that this is a skill that requires some experience, but it's a precise skill that once you ingrain it in your trading knowledge, you're going to be able to anticipate moves and understand where things are going far in advance of anything else. Now, the management of any opportunity requires the measurement of the profit objectives. We'll look at risk reward parameters today of how to look at target levels and stop loss levels. Everything we do, harmonic patterns, they follow a specific management framework. In the same way, we differentiate patterns, opportunities, and distinguish indicators for confirmation. Now, our harmonic pattern management expectations. I'm going to simplify this whole list and just say our management expectations are we treat everything as a reaction. Now, we have all the targets. They serve as the minimum management objectives, and we have to stick to those. The management strategies, they really dictate the entire opportunity of what we can expect, the minimum expectations. It's important also to realize, okay, building on yesterday, we really want to start our trade management phase at the optimal point of the pattern reversal. I know that sounds obvious. Of course, you want to buy the absolute low, sell the high, but I don't think people think enough about the initial drawdown or what they need to assess of how much beyond the measured levels we can give any opportunity, and understand there will be a little drawdown in most opportunities, but the pattern should react, and there will be signals that we'll look for, especially in the management, that tell us, okay, is this happening or not? Because one of the skills we need to master is to cut our losses tight or just scratch trades. If they're not working out, we can always re-enter. but we have to demand that action. The other aspect of all the management expectations when we get into any trade has to be a reaction. And we are, again, going to utilize tools where we trigger reactions and manage reversals. Finally, really the biggest kind of combination that I'm doing with this material in this course is bringing together Harmonic Strength Index as the absolute final tool for our minimum management objectives. So if you're not using Harmonic Strength Index, absolutely a must to incorporate it in what you do, and we're going to look at distinct situations. There's some other ideas of, say, the 30-bar window, the 30-bar rule, some basic time considerations as well that will help you to understand when it's time to cut the pattern or give it a little more time. I've talked about that 30-bar rule. That's really trying to simplify a lot of maybe a lot of complex time considerations, but it's a great rule of thumb. So we'll look at that. But everything we want to do comes down to price action management in the PRZ. So if it's the first time or the second time that it's testing, that's the only distinction we need to make. Type 1 reaction, if it's the first time, that is separated by a target 1 test. We'll look at that in a second. All of that really, again, shapes what kind of expectations, what kind of management strategies do we apply after we get into the trade. So our primary goal, again, on the reaction is go from trigger, if it's type 1 or even type 2, but the initial entry is to go to target 1. There's a whole sequence of management decisions, but they all involve Harmonic Strength Index as the primary indicator. Okay, we want to see the pattern complete. We want to go and get out of the potential reversal zone, and we want to trade up to target 1. That's the initial reaction. Finally, we're going to look at how the indicator can help us kind of quantify all of that. So, and how we can analyze the indicator progress coming out of the zone. My emphasis with all of this is just, again, we're going to be able to capture a lot of reactions, but we need to be able to learn through experience how to let those become larger moves, because you're going to get a lot of quick moves that do a counter trend move and then come back for that secondary test. How do we handle all of that? The key is to never let a profit become a loss. So you're going to take multiple shots, but you're going to find yourself positioned in the proper area where you're going to have a nice reactive move where you can manage the trade from there. This is what I wanted to get to. I wanted to get to a quick chart illustration of how we should be thinking about management in the potential reversal zone every time, and look at any pattern from the kind of the lens of a 1-2 framework, where we go and have a reaction off the initial harmonic level. If it doesn't really matter what it is, crab, bat. A lot of times we do come down to the hop level on patterns like the ABCDs that get scanned or the butterfly structures. So if you get down to that hop level on the initial test, that's all right. We're going to look for some of the other confirmation methods from a management perspective that help tell us when we have a reaction and when we can expect a reversal. Remember, yesterday we talked about complex and impulsive indicator structures, how those formations have certain expectations. So we'll combine that with, is it the first time or second time? Do we have some kind of ideal retest going on? There's a lot of possibilities, but it's really not that difficult once we look for a couple of signals that this software provides. So the thing that we want to be aware of, though, is the flawed or failed price action. And again, this relates to yesterday of some of the execution strategies, but I wanted just to bring it up again because it's really important that if we're looking at any position, if we don't get the price action we're expecting or anticipating, it's an early scratch. One of the ways that we can see that is within the number of bars after the terminal bar. So we're always monitoring that. Put a clock on it, count 30 bars. What's happening within 30 bars? Do we have price action expansion? We looked at that yesterday, but today we'll look at the indicator expansion because that too can show us, okay, when's the ideal area to understand where we're going to pop out of the potential reversal zone and know to be less aggressive on a position. So today, specifically, I'm going to introduce a few of these tools, okay? And these are specific new concepts. I don't think I've put them out anywhere. I've maybe talked about these before, but these are specific management tools, management measurement strategies we're going to put in. And the first one is the harmonic terminal bar range. This relates back to what we looked at yesterday, looking at a pattern completion point. So what does that pattern completion point mean? That has to be representative of an important inflection, reaction, at least a reaction worthy of a profitable move. So really important to understand that once that terminal bar is established, we see it in the sun icon in the software, that we start assessing everything from 30 bars and should kind of demand a constructive move in the anticipated pattern behavior. If it's a bullish pattern, we need to see price construction. Again, price construction is positive positive W formation development in the price or the indicator that tells us it's turning up. And then if it fades off or the pattern just is a dud, it goes sideways, that's a failed signal. Those are easy to manage if you know what to look for. So let's go back to this NASDAQ example, kind of follow up with this, just using this for illustration purposes. And we'll look at some other immediate examples later in the session. But look at the crab, the regular crab variation at the 1618 that has an ideal M formation, all the numbers you want to see, and then assessing that pattern. Even if we knew nothing about harmonic patterns, we can see that that thing has responded or reacts within a 30 bar limit, and then that starts at the terminal bar and literally count each bar. Now some of that is some of these strategies are even more helpful on intraday time frames. If you're day trading futures, 233 tick, 1 minute time frame, or even 5-second time frame where you're looking for short-term moves intraday, there has to be a number of bar, no matter what the interval is, that establishes the limit. So the 30 bar limit is effective. Sometimes you'll get patterns that'll drag out and just consolidate in the zone. A lot of times that and do nothing. If you can't get out of the zone in 30 bars, you're probably not going to do it. With this, we see the whole reaction not only come up, but give us that initial reaction to target 1 and then back down to target 2 for the full retest. But all within 30 bars. And I think even if we were late on the pattern and could say, all right, that's a successful 30 bar retest within that whole structure. So when we're looking at either the initial test or even the secondary test, the type 2 test, what we want to focus on is the terminal bar range. Now, we talked about that yesterday in terms of execution, how to utilize those price ranges and really pinpoint that in the zone. And of course, in identification, we focused on why that's what to look for at that area. And that just sets us up, going back, here's the crab pattern again. just to look for at the sun icon what's going on again there, because we need to see constructive movement and constructive confirmation in the price and the indicator. Now, here is the concept that I wanted to introduce today of utilizing that terminal price bar range and then projecting an individual bar tolerance. This is something I do a lot, and I didn't realize quite that I did it as much as I do. And I want to share this with everybody because for me, I'll look at the terminal bar. I value the terminal bar's significance enormously. I mean, I base a lot of trades off of it every day. And there is an individual tolerance. And we looked at the check back scenario, how a lot of times terminal bar will complete, then have the check back. Now, one of the things that I look at is measuring the range. And that gives me an immediate tolerance on how low any corresponding terminal bar plus 1, 2, 3, 5 could go before I would not assume a reaction is at hand. Same with a bearish pattern. Okay, and we are looking for confirmation after the fact, but just the individual price bar itself, it's usually a 1618, depending on how big the terminal bar is. But this narrows it even more. So this gives you even a further indication of where to be expecting that turnaround and how much tolerance beyond that terminal bar will permit. Here is that crab pattern again. Look at the terminal bar as we're coming into the zone, pretty aggressive. But we are waiting for that terminal bar to complete. There's no execution until terminal bar plus 1. But we automatically know we can project the 113 or 1618 zone to get an idea of, okay, where does this scenario fail? And do we have anything else that corresponds in that area? I mean, we do in this situation, but again, we overlay that to get an idea of where this structurally, this doesn't work. And in a little bit later, I'll show on the 233 tick or a 1 minute chart how this works. This is a 5 minute, and that's a fairly wide range. I mean, even on a 5 minute chart for futures, I'm going to say that's a wide range. I would prefer to be lining up 1 minute or the 233 tick, because maybe you have to risk 10 or 12 points on an NQ contract, which is still, sizable. The whole point of what we want to do is capture these at their inflection, because once they establish that low, then we can capture that pivot. That's the whole logic behind it. We're looking for this structural pattern to establish the low and then utilize some tolerance limits where we'll say, okay, enter this area and accept that maybe if even some crazy announcement came in where the market fell apart instantaneously, I know the pattern doesn't work maybe 15, 20 points below. The other thing about what we'll do a little later in the presentation is show you how we adjust stops, because that's just the first entry. And as we get in and progress, let the, especially as the first reaction progresses out of the zone, you're adjusting your stops. But this immediate 1618 terminal bar down there, that gives you a defined range where, say 12,470. Okay, if my terminal bar is 12,498 and 1618 is 12,521, we're looking in that 12.5 area. We talked about that yesterday of how we would identify that, especially just the initial reaction. But if I'm inputting in my first entry, say 12.505, 12.510, my stop has to be somewhere down under that hop level in a crazy market event. And this will end up being our first entry. Our first stop will be also related to our profit targets, because you'll see that this will be a 1-to-1. Our first entry will have a stop that is 1-to-1, and then we'll adjust. Within 3 or 5 bars, your stop will get moved up beyond the terminal bar. Now, this is the other way to look at structurally, where does the whole area fail? And as I just showed you guys, take a look at the zone here. Okay, terminal bar 1618, hop level. That's our larger, more precise tolerance, but where can we assume that entire structure fails utilizing the measures, utilizing the patterns in the same way, no matter what the price is, no matter what the pattern is? And I'm kind of proposing an estimation. Okay, since we put in the hop level and added this for the tolerance, especially when markets are overshooting zones, we can take this distance between the hop and the PRZ and then project it down. If it's a bearish situation, we would project it up. Okay, and this is for the initial entry. Your first entry is always going to have your widest stop. That's something else we'll get into again in a little bit. But once we get that first entry, we at least know that the entire scenario and can estimate it beyond the hop level, utilize a couple other measurements. We're then with this larger 5-minute pattern and 5-minute scenario, then we start to quantify, okay, exactly what is the make or break. Look at the terminal bar, project that down. That gives us one of the more absolute levels, and then the estimated stop of taking the distance from PRZ to hop and projecting that down all works out in the same area to where beyond this 12.466, 12.465, it's fairly obvious. You know, if you're sitting on your hands and something happened and the whole thing fell apart and went against you and it's trading 12.460 and you're not out, then you need to look at your stop management. We will adjust this as this progresses, especially as we get out of the zone. But this gives us a consistent way to estimate those levels. It will be different. The distance between the PRZ and the terminal, distance between the PRZ and the hop will vary pattern to pattern, but I've gone through this enough now, utilized this technique enough now, where this is a definitive amount. The other thing about this estimated stop level, where pretty clear, especially with something like a terminal bar measurement, beyond that, we can compare that to our target one. So we're looking at a pattern like this and we say, okay, our maximum black swan stop, if you will, between that zone, the 12.5 level, and 12.465 is fairly wide, 35 points, but our objective is 65, 63 points. And so that difference, and that's something to take a look at in terms of how to quantify risk reward. Okay, but our terminal bar, our confirmation is all targeted in that 12.5, 10 area. And we are going for, 65 points is a minimum objective on the type 1. So down here, once terminal bar completes, and this is consolidating around, how you're going to see this is that terminal bar will be sitting here already generated, and pattern will have turned green or red if it's bearish, and you'll go through some consolidation. It might not even look like it's going to work. You'll see target 1. and it'll seem like almost a distance away, but that is how you line up the difference between the hop level and target one, knowing that our entry is in this area. Where's the confirmation? In this case, it was a little bit higher, but the HSI will dictate exactly where in this zone for each pattern, no matter what the pattern. And we will relate that to target one and the hop level. Take a look at a couple more here. Again, a little bit better chart of that PRZ. And not that you even have to wait the entire range. Certainly we'll see failure signs. Some of the indicator structural stuff we're about to look at will exhibit that failure sign even beforehand. Now, in this case, you had HSI there, and there's your secondary HSI on the retest. Some of the ideal conditions we want to see within the type 1, type 2 framework. Now, the final idea of those individual bar calculations has to do with utilizing them as kind of a harmonic trailing stop. So a lot of the movements that we will look at, especially the type 2 reversals in a little bit, will have specific characteristics. If it's going to be a real reversal, at certain points, that thing is going to accelerate. It's going to move where it's going to take on a different character, especially if we have something that is breaking out and moving aggressively. And if we see the indicator making, new extremes, no matter what, we can essentially just assume that the price action is doing a serial move, a continuous trend, primary trend move where every interval is in the direction of the primary trend. If it's up, it's every bar is a higher high, higher low. If it's going down, lower low, lower high. And we can measure that and put some harmonic retracements, extensions off of that bar as a dynamic management limit. Something to look at, because this gives us a way to look at price action at specific spots and then have a little bit of tolerance. Of course, it's not going to work out exactly. Individual bars do get retested, but if we have a trailing 1618 on there, the prior bar, if we are in a segment where a reversal is supposed to really get going, then that should do a bar over bar continuation. We can apply a trailing ratio on that where it sets a limit. Now, we look at that, either utilize that 1 bar or even more generally a 3 bar trailing stop. That's nothing new. Traders have been using 3 bar trailing stops forever. I like to put harmonic ratios on everything and calculate and integrate some degree of harmonic measurement that gives me a tolerance. Again, we could take that and do a 3 bar trailing stop utilizing that 3rd bar and run a simple 1618 off of that move. That would give us an additional tolerance as we're trending within certain price segments. Well, let's look at a couple of charts because it's going to show the example quite well. We're also going to utilize the 1 bar or the 3 bar reversal in specific type management types. If we're in a type 1 first time reaction, we're going to look at 1 bar reversals because we should be moving out of the zone after confirmation aggressively. 3 bar reversals, those are better for longer trending type 2 moves. And again, I'll show you a couple of examples here in a moment, but the whole aspect of what we're doing with execution, we talked about that yesterday, is we're capitalizing on the reaction. Today, what we're doing is showing you how to manage this, how to get from that reaction to that reversal, it might require multiple entries. You might take 2 shots at a pattern, 3 shots at a pattern even, because you get stopped out where you get maybe a little reaction off the pattern and then it comes back for a retest. Remember, this is very common where the terminal bar and the pattern is established and then specific little micro processes happen of a little divergence or a little confirmation happens. So there are specific things that happen before the reaction takes off, bar by bar. But once that's established, once we have terminal bar retests, this little move within 3 to 5 bars, or an indicator window where we have a confirmation and the indicator comes out, and we'll look at that in a second. Those will all give you early signs that the pattern support or pattern zone is holding. And once that clears the zone, we should see this continue bar over bar up to target 1. And how hard that comes out, how aggressively that continues, dictates everything. If you're looking at this entire zone, and our execution is, our minimum level in this trade is 1618, and we want to be below that. We know our target 1 is up at 1265. Then we want to see that aggressively move once you clear above 12540. The first time it got there, we weren't able to continue higher. If you were executing at the 1618, not that I would, but let's just say you tried there and then you used 1 bar, 1 over each bar, you still get a 10-point jump off that 1618. That's a common reaction that happens a lot. But the retest, the secondary test structurally, again, we talked about that yesterday. It's why it's so important. That confirms the support level. From a standard price technical analysis strategy, yes. You have to reconfirm support to establish it, retest the initial point. But with the harmonic levels, you've got a lot going on in that area where once that's retested and confirmed, any progress beyond that, progress from this point forward, is going to yield more of that reaction up to our target. But the first little reaction, that micro reaction on that 1 bar level in the zone, did not get through. The 1 bar reversal pulled you out, and you take another shot. Because look here, as we progress, okay, pretty clear we have stabilization, and we're going to look at the indicator in a second, but that is kind of progress we want to see after indicator, terminal bar have been established. That's probably the big shift for a lot of people, because I think most people are looking here in the zone, okay, here to put your trades, and I'm kind of shifting everybody's head to the right by about 5 bars, 3 bars. It's over here, our execution. Let it give you a little bit of dribble and then go. Couple more. So this dynamic harmonic trailing stop price range, again, apply that 1618 and we can utilize it with a 1 bar or a 3 bar. But there should be that kind of progress that does not go beyond that trailing area. Again, here's that where our expectations are all in this lower 12,466 area, and that's absolute level. But the bigger thing is we will see the sign. So if this thing bounced up, did some consolidation, started to roll over, yeah, it's having some signs of failure. And certainly, again, if you were looking at your trades and you didn't get out by 1265 or 1260, then you have to take a look at what you're doing on a larger level. So let's get quickly into how we have to analyze our management strategy, because there has to be action on the management side of things. And I think that's oversimplifying it, where You can't sit on your hands. But this framework ensures that you at least have some kind of plan at either the target 1382 or target 2618 that gives you enough where you're automatically securing profits at those levels. For me, guys, I'll share with you one of the things that I do is I trade weekly options. And one of the things that I'm doing automatically is pulling profits. If I get contracts to double, I'm no under any circumstance I'm looking to pull profits or at least take partial profits. It's something that part of the trading that I do that with the reactions and what I understand about option premiums and harmonic patterns, the kind of my automatic response once I hit my profit targets, especially with my weekly option trades in the long run, has made it so much better where it puts me in a better framework of mind. And also, I used to think, okay, well, I'm going to miss out. I could have a huge move. And over the course of history of everything, the kind of the longer term best move for me is securing partial move. If I have 30, 40 option contracts, I'm taking 10 off and I get a big move. And that's in a lot of, I play, 30, 40, 50 weekly options, sometimes 100. But part of that, taking some of that size, is understanding I'm peeling some of that off. I get a move, I'm taking that profit no matter what. And we'll look at that. The other thing is that I utilize are the discretionary profit targets, secondary confirmation readings, trend lines. That helps me to know whether or not we stay in the trade or we get out. But the automatic profit targets, okay, that's the aggressive strategy. That has everything to do with the fact that we treat all patterns as reactions, and we are capitalizing on what the phenomenon of harmonics are, harmonic patterns, the natural harmonic reaction. That's the move off of, say, the 1618. You have a crab pattern or deep crab pattern. How the heck does that reverse off of the 1618 like it does so many times, right? I'm still in all of it. I've been doing this for decades. It is a phenomenon. But that is the natural harmonic reaction. That reaction off of the harmonic zones is what is our main advantage. We can bring in other strategies and other just general trend concepts. And yeah, hey, we're in an uptrend. We want to, be buying. But part of it also is to look for pullbacks, look for situations where the natural harmonic reaction gives us a great opportunity. And we're going to look at a few examples here in a minute, but all of that falls within the expected framework. Okay. We want to be able to have an ability to understand or at least expect a certain outcome following the pattern. And to do that, we have to define the profit targets in advance, which we do, and respond to them. And in the type 1 reaction, okay, the initial pattern completion, we need to set our profit limit, okay, as a part of the strategy when we enter the trade, the same way we enter the stop. We'll look at that today because I'm going to bring out the depth of market window and just show how we can click the trade. And in fact, it's probably, we should follow up with tomorrow and do some of that in the gold session. Anyway, here's our bullish initial profit objective strategy. It doesn't matter what the pattern is. We utilize the pattern range from A to D. So here's X to A to B, that sets up the whole pattern. But actually, we measure the profit objectives from A to D, and that gives us our 1 and 2. Okay, the 382, that's our minimum level, and we do frequently get up to the 618 in a lot of quick reactions. We will highlight a few things that we look for in this zone, but that's the minimum structural move. And again, we will bring some of our individual price bar management strategies when we get there, because we will treat price action differently in this area than we do in this area. Let's look at that example. Here is that first move. Okay, the confirmation comes in. All of that sets us up where, as I said, our confirmation variables, the little things that we look for after the pattern completes, tells us, okay, this is the area here. About 5 bars after the fact. Compare it. Okay. Bullish pattern, and then trying to get to 382 zone in a, I wouldn't say exact linear fashion, but pretty close. After those signals, that low is established, and we have to assume that. Where do we assume that? We can assume that pretty much on this breakout. Absolutely. And the other aspect of it is, since the 1618 is a minimum objective here on the crab, our entry cannot say anything but 1521 or lower. This thing went all the way down to 12,500. The 1618 is 12,521. And this is something else that I'm mentioning because it's going to take a little bit of time, a little bit of experience for you to be able to recognize what you need to see for these successful moves. It'll come down to the type of confirmation, but you don't want to be chasing it. And that's something a lot of students, prior students of mine, have done, where they prefer to get it up here and and then try to see it run. But my experience is that we see this reaction so much that if you're trying to chase it on the first move, you're going to have to go through a retest. That's why I prefer to be down here, right at terminal bar where it completes, playing it for target 1. Now here's the thing, is HSI triggers us at that level. If we're automatically taking something at target 1, and I don't think that's a bad strategy for new people. If you're new to harmonic patterns, I do recommend automatically putting in target 1 level to take half your profit off and then manage the rest. You'll be able to capture this move quite a bit, and build experience, build a lot of confidence in that manner. But either way, we're looking at pretty much the termination of this reaction, especially if we see an HSI in between target 1, target 2, and we get a violation of the trend line. We'll look at a couple of trend lines, just some basic assessments. But there are, again, things that we are looking for at the management level. And the same way yesterday, we were looking for specific events down at the completion of the pattern. We now look for specific events at the management level, the management target, and we kind of tighten our expectations as we proceed. So if we get to target 1 and we begin to continue but can't follow through, those are warning signs. If you run right into an HSI or say a corresponding amplified reading, we'll look at that in a minute, but we're looking for signals here that would define an overbought reactive, the end of the reactive move. A lot of times it will, if you're going to just, if the first test, because that's the other question I get, how do we know and how do we stay in those trades where it really gets blasting through? You will see at the specific levels, and you will see it. Let's say we generate an HSI, or we generate some kind of bearish warning signal there. The price action will blow through it. And in a lot of ways, if it's a type 1 move, that's an explosive type 1 move, you will see aggressive continuation, and you will never, ever violate the trend line. So think of it this way, okay? We want to focus on the levels in a step-by-step fashion. When we get up to target 1, we recognize that's the first time. If it triggers some indicator signals that say, hey, it's probably about it for now, and it breaks down under the trend line or even under our target 1 level, those are all signs that a full retest is coming. There are a few different spots, okay, in the management framework where we can make these assumptions. In the first reaction, that's the most important part of how to capture those reactions. There's a ton of these opportunities, okay, and one of the problems with the type 2 reversal is you'll get failures. So it is important to note that you're going to have a higher degree of accuracy on the first test up to target 1. Be aware of it, because you have to demand a more responsive move from the zone, especially after confirmation and the check back. But if you can discipline yourself to capture that move, there's a lot of people I know that have made a career on just that segment. So again, the natural harmonic reaction is what I'm talking about here. That is the whole harmonic phenomenon that I have talked about, either in the patterns, the stuff that's related to the Fibonacci, natural cycles. It really doesn't matter. For our perspective and how we want to be thinking about it, we're looking to capitalize on that reaction because we've properly identified and really illustrated the levels of what I call a natural cycle. That's what a pattern is, the end of a natural cycle. And the PRZ gives us those proper ratio levels. So the other part of it is that if there's no reaction, and it's kind of, I like to say, a dud reaction where it doesn't respond or just goes sideways, those are signs of a failure or a flawed PRZ. And we would manage those accordingly. We would just scratch those off. So all of that is critical. Again, remember the defined trading realm, because it's all within the price ranges that we're narrowing down within the PRZ. Also, the profit target, that helps us really validate how to think about risk reward. How much do we need to risk? Now, the discretionary management strategies, these are more for the type 2 that we'll get into, type 2 strategies. They involve the trend line, looking at specific trend line analysis. I'm really big on trend lines, and I strongly recommend a classic technician, Richard Wyckoff, who did some of the best structural wave work ever, period. So check out him, because his breakout structures and a lot of the things that I do are inspired by that. So we want to look for specific structures, and we want to look for these formations, okay, relative to our profit levels, to all of our levels, and then have to make the discretionary decisions of how much do we give the position, how much time do we give the position, especially in those type 2 moves where they're retesting the pattern, but we know those are the situations where they yield larger reversals. Now, I utilize 2 really basic trend line management strategies. I have talked about this previously, but I think it's important to emphasize not only these types, but how to handle them. There's a primary trend line that most patterns possess. It's a steady development, I like to call price construction off of the pattern. That's usually 45 degree or more. And then the accelerated trend line, that's when you really pop and you get out of the PRZ. That'll usually be a 60-degree thrust move, and it can initiate, really an entire new rally. Or it could just be a strong reaction, which we can capitalize on, but we have to manage it properly. And again, we look at those essentially at the profit levels. Now, we just want to see and judge how strong these moves are by how steep the trends are. We just want to look if it's, we can make a general assessment if it's 45 degree or greater than 60 degree. We will be able to see how strong the move is. We don't have to fudge it. We can, we can of course adjust the magnification on charts, and you can say, okay, Scott, that's not 45 degree. I can make that 60 degree. If you're fudging it like that, okay, then you're probably not seeing it properly. You really need to just kind of step back and see it, just not touch the chart. Here's a typical PRZ. We see stabilization here. We'll hit the PRZ, maybe scrape the hop level, form the terminal bar, and then try to get some price construction out of the zone. But what happens is that this will come together and begin to take shape where we have a successful reaction at hand. Within that, I would say that 10, 12 bar window, we have progress out of the zone. One of the first signs of progress out of the zone, I do want to highlight this. If you're in a bullish bar, once we hit the candle that forms the terminal price bar, we want to see a close above the PRZ. That's a really great first sign of a change in the trend. If it's a bearish PRZ, of course, it would be a bearish close below the zone. But that takes shape where then we have kind of a new reaction trend occurring, a primary trend. That usually will come about of a few price bars in the zone. We always want to start with the bottom terminal bar or the extreme bar that is next to the terminal bar and project that up from the logical few bars that develop. And then once it takes shape within 12, 15 bars, you'll see, we'll know if it's accelerated or not. Here is that crab pattern. And again, we're in that, literally that 5 bar window here before it makes that low. And actually by bar 10, we're out of the zone. So taking on that reactive move here up to target 1, and then you hit there and you hit target 1 by bar 14. Now, you're pretty strong off of that move, but no follow through. And this is something that we expect. Once we get up into target 1, target 2, okay, and on a thrust accelerated move like that, if it does not follow through and it just kind of rolls over, that has reaction written all over it. And you have to be, it's an easy move to capture as long as you are prepared at target 1 for that to roll over like a duck. Because if it does roll over and it only takes a few price bars, you're out and you're anticipating the full retest. Literally at the 3rd bar breakdown, and here's a great way where, remember we were talking about 1 bar, 3 bar breakdowns. Okay, once we get above target 1, if it's going to be really strong, it should continue on a 1 bar thrust move, bar over bar. And certainly if you take out a 3 bar low, 1, 2, 3, and something larger is falling apart, well, it's not going to take much more than that to know that, okay, this looks like it's breaking down. We know it's a type 1. Okay, nobody knows it's a type 1. There's a lot of people doing harmonic patterns. Most of the people doing harmonic patterns do not know what a type 1 harmonic pattern reaction is. We do, and we know that that's going to retest with the larger move, larger reversal for the bigger move up to target 2. But that's all indicated by this accelerated trend line. That's pretty steep. I think we can all agree that that is greater than 60 degrees. And then our primary trend line, that comes back on the retest and establishes itself on the type 2 retest. That actually is helpful down the road here when you really break above the target 2 level. But still, that's a pretty clear 45 degree uptrend. That's representative of what it is. Here is your type 1, type 2 management framework. Again, this shows it more reaction reversal of how we want to be thinking of all harmonic patterns. The common thought is, okay, how do I know, or what if I miss out on a big move on the first reaction? My expectation, and the proper expectation, is that if you're positioning properly on the first move and you get this thing going, and if it's really going to move, it will blow right through the 618. You will not get any HSI or any confirmation of a bearish confirmation here. It will just continue through, and that's, that happens frequently. The real trigger that we want to look for at those levels is, where is HSI unfolding? When we're on the retest at type 2, yes, we talked about this yesterday, how we're looking for confirmation down on the retest. Now for the management, we do the same. But as we said yesterday, type 2 retest, we look for target 2. Now in today, okay, we're expecting target 2 on the retest. That's the basic expectation. But then it absolutely blasts on through. Notice the kind of continuation it takes, a 1-bar continuation, each higher high, higher low, and then goes above target 2, forming our first HSI, bearish HSI, above the zone, probably about 20 points above the zone, and about 30 minutes later, after hitting that initial target 2. Not a bad place to be thinking here. If I see target 2 and I see 12,600, I would be anticipating some overspill. 12,600 being a very psychological level. A lot of traders would look at that intraday all day long. But getting up there, the warning sign is HSI. And then we see some consolidation. We don't see any follow through, and we see it begin to roll over. Now, for us at that point, if we hit target 2 and we generate an HSI signal, we're done. But does that mean it can't keep going more? No. And that's part of the thing with these secondary reversals, where at or above target 2 might not be a bad spot to take half off and then try to give it more time, maybe 30 more bars. Here is another application of, once we get a signal and we're in that target 2, how do we know if this isn't really going to go in our direction, or maybe it's going to come all the way back? Well, if we're up here and we have a couple of bearish readings that generated some bearish expectations, but it only goes sideways, I would wait and count 30 bars. Can we hang up here for 30 bars? Can we make some progress higher within 30 bars after that bearish signal? Another way to think about it. Now let's look at the type 1 reversal the first time, following up from yesterday, and how the automatic profit taking and those aggressive strategies really help us to capture the reactions. Really important to kind of see basically the tie together of the whole framework, and then how to assess the individual price action at different points within that PRZ, and from target 1 back to the PRZ up to target 2. Again, the whole management framework, we want to be automatic at 382 or 618, taking us back up to that zone on the first test. And I think if I'm long, let's say I'm long, I don't know, 6 or 8 NASDAQ, and I think maybe the minis are a better way to go. If you're, the minis are a great futures vehicle. Okay, the E-minis. Maybe you grab 4 of them. Great way to think about that is, when you put in the execution, okay, we're putting 2 contracts in that are automatically have limit order at target 1 or above. on the first test on the type 1 executions. Now here is where the termination of the type 1 reaction, we can assume it. We're at our targets, we're between that level, or might even be above, but we're at least at the 382, we have hit that. We're then looking for the HSI. That is the sequence of management where once we clear the PRZ and we get up to the 382, our next thought is, okay, if I see an HSI signal, I'm expecting the end of the reaction. We'll look at how this behaves in that zone, but that's the essential type 1 reaction response. That's the trigger for the management. And then if it rolls over, okay, we would expect a full retest. Sometimes it doesn't roll all the way back over. That's all right, but we're just trying to capture that reaction and utilize the HSI as our real trigger window and see that happen then and see the violation of the trend line. We're targeting 12,562 no matter what, and that's a level you want to plant in your brain. You got up as high as 12,580 or 75 in that level, so you're almost 15 above your minimum target. Okay, but if that's rolling over, it does a 1 or 3 bar reversal, 3 bar reversal here. By the time this thing has fallen off 10 points, you're probably starting to think that might be over. Hey, Jeff's asking that never tested the hop. Okay, that's a good question, Jeff. And we'll get into that in a second. But it's not a mistake, okay? That secondary test. Now, the question is, why didn't it come to the hop? Don't we have to wait for the hop on the secondary test? No, as long as we have an indicator variable that fully retests the zone, so we come back on our secondary test. Our ideal scenarios, sure, will give us a full retest to the hop, depending on what kind of indicator structure is happening on that retest. But this is more than valid as a type 2. The other thing, remember, it's a crab pattern, so we look at that more at the 1618. If it was a deep crab, we would usually see deep crab at the hop. But it's all about where the indicator comes together, and I'm glad you brought it up, because everything that I'm showing with the software here is how we go from level to level to level and establishing expectations based on the measurements. It's up to us to draw a couple trend lines, consult 1 or 2 time frames, which is what we're about to do in a minute. But it all comes down to responding to that sequence of price structure signal and indicator, the indicator trigger. Where that indicator trigger comes in is everything. Now for the type 2 move, the type 2 reversal, okay, that's going to take a longer time, as we were just looking at that chart. Our profit objective when we're down there is we are thinking target 2. So when we're coming back down here, retesting the zone, okay, we're thinking 12,601, target 2. I don't know how much beyond 12,601 that will go. I don't know if that'll be a home run move or not, or if that'll just get to 12,601, but that at least gives me a number on the top side where my 1618 number at 12,521 tells me there's 40 minimum on this type 2 retest move. Now I've got to optimize what the confirmation is on this area and really locate the trade within the zone. But I'm looking at that level, at that retest, and recognizing that it is, look, it's related to this first test. It's almost perfectly 30 bars after that terminal bar, but it's still relevant is what I'm saying. And it's an ideal type 2, especially because it has the other conditions that we like to see. Actually, it's not bad to see that this is a reaction with the ideal bearish signals we want to see violates the trend line and then retests. And that's a successful test of support with a whole lot of stuff behind it. But all of that is stacked so we can have greater expectations. That's the whole essence of the retest, and knowing that if we see a pattern also, we'll bring up the scanner in a little bit, but if you see a pattern that's completed and on the scanner it said it completed 30 or 40 bars ago, it might be an even better opportunity than on the first test. Hey, Patricia, you're asking, would you use the low as the stop loss and apply the trailing stop after it gets out of the PRZ? It's all about where the indicator triggers. Sometimes it's going to be at the hop level. In this example, it's in the zone, but we can put some of those other smaller measurements, the trailing stop, and the type 2 move might require more than one retest. On this one, it was kind of ideal, but it may require a secondary shot. That's okay. It's all depends on where the confirmation comes in for HSI, and some of the other indicators, amplified and RSI. We'll look at them in a minute. But again, here is that type 2. The other thing about the type 2 is it has to fully retest the zone. That's something where if you go back to that example, okay, where does the secondary test come in and fully hit, kind of create its own terminal bar? It's almost exactly at that 1618. Does the reaction in the 7 to 12 bars, does it depend on the time frame? No. No, because all of our decisions are based on the pattern. Our primary pattern here is a 5-minute time frame. Now we'll look at some other time intervals related to this setup. But our main decisions, our main price parameters, where we get in, where we expect the reaction, where we would expect minimum objective for the reversal, are based on that pattern. So let's get back to that, and in this instance, on that retest, okay, that secondary terminal bar happens right at that 1618. So we start paying attention, close attention, when it fully retests the zone, and then we'll look for what is happening there in the same way that we do with the initial test. This is a little bit tighter on the retest, okay, is pretty clean, but that's what we want to go through, and go through the same process of terminal bar, HSI, execution. Now, the HSI signal is mandatory, especially for our target 2, when we're monitoring the management of that position, really up to the between target 1, target 2. And we want to look at how that relates. How does that progress come about versus the trend line off of the zone? And then we're going to look at the indicator framework, because whatever's happening at that completion point, is there an RSI BAM? Is there a confirmation divergence? Is there a complex reading? These will give us little signs and give us further evidence of what we can expect. Now, in this setup here, you had perfect confirmation on the first test. Like we talked about that yesterday. If you have RSI BAM, and that gave you really nice stabilization, that gave you a lot of strength at that level with the zone. You had HSI, which is mandatory, but look, we talked about RSI BAM and how that is signaled by the software simply by the green line stopping. So when we see the indicator, we see the green line stop, we start looking to the right. What's the pattern? What's going on? Is there an HSI? You have the green line stopping, so you have an RSI BAM on bullish amplified and bullish RSI BAM with relative strength index. Both of these making progress. And then look on the secondary test, even though it doesn't line up exactly with that secondary test, this is enough relevant evidence to say, hey, there's a lot behind here with that successful secondary test and another HSI reading that says, okay, this is strong support. And even at a minimum, if I'm targeting my retest to go to target 2 as the reversal minimum, the indicator, all three indicators give us really nice construction. Great, the development of these readings where not only they correspond at the same level, they successfully reverse from the prior readings where they're higher than the prior reading. That's really nice confirmation. Okay, they develop nice W formation. I started to talk about that yesterday. I'll get into that in a minute with a couple of illustrations, but we want to see that constructive move, and we want to see a W bullish formation in the indicator. That gives us a really positive bullish construction after a couple of the other major RSI indicator developments. It's going to take a little bit of time for everyone to see these things real time, but this is what to look for. And once you see them, again, they're going to stick out. If they're not there, and as I said for HSI, if we don't have HSI confirmation, we probably don't have an actionable opportunity. These developments are much the same regard. So what were the expectations we mentioned yesterday? Really quick, the single test of any indicator is going to give us kind of a reactive mindset. And we'll utilize that. If we just have one impulsive indicator confirmation, okay, maybe it gives us a reaction. But if we have something larger, RSI BAM or a confirmation divergence, then like I said, we have evidence of support being confirmed by the indicator readings. Now we want to monitor the trend in those structural readings as well. And again, I mentioned how we can look for W formations once we get out of the extreme. That's positive bullish construction. And we can identify those levels really where terminal bar lines up and where the indicator extreme reversal occurs. We are always linking up the indicator extreme as it's hitting the zone, and we talked about that yesterday. Sometimes it might be a few bars before, but usually pretty close. And the thing that we want to see are a few of our terminal bar events. Okay, a retest of that terminal bar extreme. Some confirmation. Give me a confirmation variable, something. HSI, definitely we want to see that. And we want to see maybe amplified or all three in that area. The other thing that we want to see in the indicator formations is this W formation where we come up and we form a double reading. That would be great. And get a little more positive development where we get 3 of the 4 legs of a W formation. So we're coming down much like a regular price pattern, but in the indicator, we'll see a thrust, come back, retest. And that's this kind of W formation for bullish. It would be an M formation if it was bearish. These are some of the structural indicator signs that'll get flashed as we're consolidating in the zone to trigger a valid reaction. And that's all we need to do is capture the reaction. The final piece that we want to see in the indicator formation is a crack above the midline, the 50 line. I know I've mentioned this many times in the gold member sessions where a lot of our accelerated moves come after the indicator forms some kind of W formation construction, and breaks above the 50 line. Once that happens, then you're more in an accelerated state to go from 50 to 70 or 50 to the 886 if it's HSI, because as we are trending higher and we go from this second half line, we go from the bottom to this midpoint, usually going to take a lot longer than when we make this progress up above the 50 line and get more towards the overbought extreme, because this is where the price movement's coming. So we look for that indicator development, and we can see that here's the crab pattern itself. Now, if we overlay and put our indicator analysis with it, it's going to make it a lot clearer. So there's the PRZ. Okay, we're trending lower into the zone. We hit the zone, we come out. This is our first W formation of any type where we have an initial low, secondary low, that sets up 3 of the 4 formations. Okay, now as we pop above here, we know we have something a little more substantial behind this. You have this a little more clearly in RSI. And look where RSI gives you that W formation. Real constructive development. And again, on the secondary test, you have HSI, you have amplified down here and hits the zone and gives you a little W formation. Also notice this thing really gets going when it busts above the 50 level on both amplified and HSI. That's something that we can use as we're coming out of the zone. It's great for reactions. Utilizing this trend line coming out of the zone is great for reactions too. We look for HSI, yes, but something like amplified RSI is even more sensitive because it'll show those rollovers even more clearly, or more quickly. Monitoring those indicators, it's a great way to see what's really happening. The other thing about it is that if we get the retest and we don't get any indicator development, like it just goes sideways, or maybe it hits the 50 line and rolls over. Okay, these are all signs of a flawed zone or a flawed retest. And that's when we cut it early. Now let's look at a couple of time frames, and then we'll go to some questions, and I'll get back to the rest of the questions. We want to look at some comparative time frames. Okay, we want to, every day that I'm looking at, say, a 5-minute or a 1-minute futures chart, from trading NQ, I'm looking at the tick chart, 233 tick, or I might even break that down to a 5 or 15-second chart. And then stocks the same way. If I'm doing weekly options on a stock, I'm looking at the daily. I'll probably be trading off of a 4-hour or an hourly chart, and I'll look at the 5-minute time frame. Now we do all of that. We look at those time frames because we're analyzing the same relationships, any pattern completion points, the warning signs. We're looking for all of the same things on each time frame. And then we're going to assess what's happening there. Okay, because for each time frame, that will give us the proper expectation. Maybe we have a great little bullish pattern on a 1-minute chart, but we're in a bearish hourly Gartley. These are things that will affect our expectations of, we would still pull the trade, but if it doesn't make a move, then it's typically going to be a reaction because your longer trend is working against you. Now, here's a way to look at any time frame on what pattern are we going to even execute, okay, and how are we going to manage it, and then what are the things that we will bring into the pattern itself to know that maybe a larger reversal is unfolding. Again, we would want to look at our type 2 moves, okay, but we would also maybe take a look at a longer term time frame. If I'm looking at, say, we have that 5-minute pattern, maybe I'll check an hourly time frame, and then I'll look at, like I said, a tick chart. And so here is our 5-minute crab. Again, really nice structure. This actually just materialized. This is from last week, folks, and it was one that uh, worked out great for me on what was it, the 6th or something, or I don't know. This is a very recent example of all the dynamics. So it's not just a well-chosen example, but going on even a standard time frame for say day trading, I think everyone can agree. If you're day trading and you're clicking many trades a day, you're probably on a shorter time frame than even 5 minutes. So let's start with the 5-minute. Let's just use that as a primary time frame. In the gold member sessions, you folks know that I always say, what's the last 5-minute HSI signal? That's a great way to be looking for direction, especially if we're right at the open of trading or early in the morning. So 5-minute primary time frame, we have a whole bunch of stuff. Maybe I would look at a 233 tick. Tell me what's going on down there. And interestingly enough, we have the same crab pattern with the same dynamics, but look at the retest. On the 233 tick, we get a bat pattern, and we get a few things that also give us a greater expectation that this secondary test might have something on it. Now, I know a lot of you might think, well, what about the bat? Shouldn't that have a type 2 retest? And again, we would look at that and treat that in a minimum perspective as a reaction, but we know that the larger crab has the potential for the type 2 target move. It comes into, again, where does HSI trigger once we get up there? And the other indicators as well show us a pretty rapid expansion, as well as even forming, look up here, complex structures. So that type 2 move that triggered on the 5-minute went all the way to the target and beyond. On the 233 tick shows us actually some interesting things where it's got a very strong RSI reading. It broke out above the prior highs. That seems like a lot of progress to me. That's what the indicator is really showing us here. The other thing about it is the complex structure, this M formation, it's going to take some time. So if I'm managing the trade off of here and I see a complex structure, all right, I'm not surprised that this consolidation is unfolding here. If I'm looking for a larger move beyond target 2, this complex structure has to be retested. So maybe I can ride this trend line until I see if this gets resolved, if that's going to be, if that'll get violated, or we see something larger materialize. Those are the ways to think about it. I'm not saying that that is every time, but if we're searching for the larger possibility, we look for evidence like that where the position, the price action needs more time to resolve itself. It would be great to get some kind of ideal bearish signal up here as the termination point for this reversal, but it keeps on going. Here's the 60-minute time frame, and what we had down there last week was a 60-minute HSI. Actually, we had triple confirmation on the 60-minute. So this is a great way of looking at the larger time frames, and I mean focusing and using HSI as one of the primary metrics to pinpoint these continuation levels. Some of the stuff that I've posted on the cryptocurrencies rate lately have been 4-hour HSI continuation signals that have been amazing. And yeah, you could use HSI unto itself, but if we've got a couple other patterns forming and we can check some other things, all of that coming together, that's again where the evidence really builds for discovering the larger moves. The other thing about this 60-minute chart, once the HSI triggers, is just follow the indicator structure and the construction out of that zone. We know HSI loves to go from extreme to extreme. So on the longer term time frame, we know we're oversold. Say it to yourself, oversold, oversold here, oversold. That means it's got to come back and react at a minimum. That's the area to be looking for bullish patterns against a larger time frame HSI signal with oversold readings. Those are some of the most ideal conditions you can get for larger moves. And even though this did give you a huge move, notice how it still went through the type 1, type 2 framework on the 5-minute. So a lot going on there and a lot happening within the management framework. And we'll look at a couple of other real-time examples right now, and we'll look at some current things I've been talking about, some of the immediate kind of pattern opportunities we've been looking at in the past week. But everything we do, okay, within this framework has parameters, and we assess them in advance. That is critical because that will eliminate all of your emotional struggle. If you're struggling with your trading right now, it's because you are not measuring what you're getting into. It's really easy to say you're identifying, and it's really easy to execute. Anybody can click a button, but where you get out defines the entire experience. That's why in that process, to remove the emotion, we have to measure our parameters. And if we're satisfied with our risk reward parameters, that's going to build a lot of confidence in being able to stay in the position. The other thing, from a harmonic pattern perspective, we utilize that reaction perspective until the reversal is obvious. And as I said before, we'll manage the reversal. We'll trade the reaction. And a lot of it depends on the environment. As I said, okay, give me evidence of RSI BAM and some of the other strategies we said that help to boost what the pattern is telling us. We will look for and we will reinforce more in our gold member sessions going forward, the importance of the automatic and discretionary strategies, but the automatic especially for everybody that's new. Really critical. I think whatever market you're trading, currencies, futures, options, there is an automatic aspect that all great traders have. Some of the people, the guys that I know, that some of the guys I've been fortunate enough to spend time with, taught me a bunch, especially the guys from the floor on the NYSE and New York Mercantile and Philadelphia Exchange. I mean, I've spent quite a bit of time on the floor. I've, been around a lot of successful floor traders. And one of their greatest abilities is to automatically capture a profitable position without even thinking about it. I find a lot of students that I've worked with sit on their hands or just don't know how to capture or when to capture profits. And the best way to do it is to define the price parameters and then look back. If you're not reacting at those price levels that the software is generating, then you need to stop and look at why you're not, because there's something preventing you from following the framework. Then finally, the monitoring the indicator progress and the structural formations that give us the early signals, that has to match up with patterns too. That is essential to really highlight the importance of why we're looking for that. That's a specific formation. It is a structural formation that is kind of internal with the individual price bars. But if the price bars are reversing with the pattern, they're agreeing with the pattern, I like to say, that's going to show up in real constructive indicator formations as well. But everything we've done and a lot of the stuff that we do in the live sessions, again, for new people, will take time to put it together. but what you'll find is you have to respond to the levels of the software. I'm showing you guys the signals and the things that maybe highlight the preferred or the best opportunities. But there's still that element of requiring to take action. Okay, take an action on a reaction. If you get a reactive move and then you get an HSI signal that flashes in front of your face, you scratch the trade, or you capture the profit. If you get something that doesn't work out within 30 bars, you scratch the trade. Or as we talked about in the execution session, if you get counter signals that go against the pattern, you scratch the trade. Okay, without confirmation, we're not taking the trade. We're not executing the opportunity. All of those give us confidence. Everything we did yesterday was to build the confidence in what we're recognizing, so that when it comes time to manage, we're either reacting quickly, and a lot of times we react quickly because we don't have the confidence in the position, so we just want to get out, hit the bail button, get me out. Or we have confidence in the position, so we know if it does some gyration, that's just some consolidation before the bigger move. We'll talk more about this in our sessions coming up, because there's a lot of follow-up I want to do with some of these new specific strategies, how to look at the individual bar measurements and how to look at the 1-bar, 3-bar trade management strategies. But all of this is designed for everyone to get as exact and as specific at each point as possible. You're going to get stopped out, and let yourself get stopped out, but know that the experience you're developing every day, where you make less and less mistakes, and then you see it more clearly, you execute more clearly in line with the framework, and then you see the results. I think a lot of what I've done in recent weeks and recent months, of a lot of the positions I've been throwing out, everything from, a lot of you guys know, things from like Macy's to even recently Palantir and the Bitcoin stuff. It's consistent. I don't throw out too many losers. I don't throw out too many mistakes, is a better way to think about it. So I think a lot of people know that if they putting together the right elements, you're going to highlight the best structures. Okay, and I see people drawing harmonic patterns all over the place. What I'm laying out are the elements that support the best situations to give us a profitable reaction we can capitalize on. So that is what it's all about. I mean, that's really the essence of that whole framework. And I got a couple questions. Let me take a couple more of these questions and then let's wrap it up. Couple more. So, hey, Marcus. So Marcus is asking about the gold, and you're saying that had a bat and a deep crab, both turn rating around 1960. Yeah, and we've been looking for gold to go back down and do a retest. And so that retest was back down to about where we hit this past week. Maybe I can let me get the chart up and bring it up. So maybe that was from a little while ago, but no, we're looking now for that to retest. There was a crab pattern. There was a couple things down there that it took a while. Okay, but it now hit the retest of what we were waiting for. Let me see here. Let me bring up the software. And yeah, let me bring up the software, and then I'm going to bring up the reflector of the execution window, because I'm going to show you guys how to preset your depth of market, your execution windows. This is mostly for futures, but the same application applies for Forex or stocks, way to set your profit targets and your stop loss. Let me bring up E-signal here, and I'll bring up the gold chart, because gold has been one of the really premier markets we've been featuring since last summer, and even before. We were looking for that big move up to about 2100, and then since August, we have been kind of on the sidelines, backing away from gold, looking for a retracement. And it just took a lot longer. It took a couple extra months to materialize, but here it is. Here's gold. And so now we're back at the retest. Yeah, there you go. So here's the deep crab and the bat you were referencing, and this was something we talked about last week in our session. And the other, let me bring up the other pattern from long ago that we've been highlighting. There it is. So we're back at the hop level, folks. This is that crab pattern, okay, all the way back from there. And I know it's sloppy. Yeah, Scott, why is this going through there? Why is it still valid? And I'm using this as a general target. And if you go back to our sessions, especially last Monday, we've been looking for this to roll over. And for certain markets like the gold, these kind of secondary, or excuse me, these tertiary retests are common. And I was really basing it off of this retest. Now I'm looking for it to go back up off of here because I'm triggering off this hop, but I've got a couple of indicators here. And I have HSI about to trigger. So we'll probably talk about this tomorrow morning. Okay, but that's about to go, and markets are going to open in a few hours here, and you're in a pretty nice position. But take a look at what's going on. You have 1, 2, 3 triple confirmation that says that's oversold. It's going to take a little bit more time because these are pretty deep, but at least you recognize the fact that we're oversold. The other thing about this entire situation, okay, is the fact that we have come down here and a couple things going on. One, these are all complex readings. So you have an M formation that precedes this move. That's regular RSI. Here's amplified. Okay, and then even with HSI coming back to the extreme as well, we're monitoring the trend of these indicators, okay, down into that zone, into that hop level. We'll look at this and see if there's anything else developing in this area, but that's significant. We talked today about how we can look at indicators as they're coming out of the zone to monitor progress. But something else that we look at too is the indicators in, and this is still technically an indicator downtrend, but very close to breaking that. Those are early signs, but great. And when you overlay or you have obvious patterns, which we do, and you guys know I've been saying 1836 for a long time, this is a better situation for this to then rebound. And rebound where I'll assume a reaction. If we trigger an HSI at the hop, this is 1836. This is continuous gold. Okay, I like the relative position of everything that's here because we know that these RSI readings have to get retested eventually. These they are RSI BAMs in the works. The other aspect is, look what happened on standard RSI. Okay, you have a high level RSI BAM that just completed on the 4-hour chart. There's the complex formation. Look at the red line. Then your green line goes on and stretches out for a long time. But finally, we have a retest. And that RSI test is important because that is above these prior readings. Look at that red line. And in the oversold level, about to give us likely an inflection, impulsive move. That's a really quick 2-bar, 3-bar inflection on the 4-hour chart. indicative of an impulsive RSI move, which is good, especially because it completes the RSI band. The only thing here is comparatively, look at amplified. That's the middle indicator right here. Still in a downtrend. That shows us maybe a little bit more time, maybe even a complex structure. What does that mean? Well, the complex structure just says it might take 3 or 5 or 7 more bars. It's close, but it's just going to take a little bit more time. Then we get out. That's how we set up and look at those indicators coming in. That's really some of the ideal situations we want to see at the number, and the number I've been saying for a while. So that's a great example. It's a great kind of situation that I'll follow up on this week, and it's a heck of an opportunity. Look, we've talked about locating. This is a great example of how we locate opportunities within the larger trend, and we've been looking for an area to jump in on the longer term continuation. Gold's made a huge move. It's still in an uptrend on the weekly basis, and now we have a pullback, and we are about almost ready to trigger HSI on the daily level too. There you go. Look, there's HSI on the daily. So again, consulting that higher time frame, the whole gold scenario is very close. We've been expecting it, and I've been saying this since December. I've been looking for a low, but then just taking a little bit more time into January. That's fine, and now we have the evidence we want to see. We'll come back to that on Monday. A couple more, and we'll wrap it up. How do we calculate the stop loss from the terminal bar to the hop? Project it down from the PRZ. Okay, let me show that one more time. Again, what we talked about today was how to approximate, how do we know where the structural make or break point really is? And how can we utilize the software to decide for us? So let me go to 60-minute, 4-hour chart here. And let's look at this shark pattern. That's outside the M and W formation, but a pattern's a pattern, and that's been the point of everything I'm talking about in this session and in this course material, that we are now focused on the terminal bar. Okay, and I prefer the M and W formations. Shark is a great pattern. I didn't mention it too much in this course, but let's just look at terminal bar, and I'll review that one more time because it works the same way. So there's terminal bar, and there's the PRZ. Let me bring this in a little bit. There you go. So what we want to look for is establishing the zone, okay? And we want to use the low range of the zone, not the terminal bar. In this instance, it's the 113. Okay, you're going to have it's the measured level. The terminal bar is really the reactive kind of real world level. Whatever the low range of the PRZ, that's the measured level. So we'll use that with the hop. Okay, and just take that distance, highlight that distance, whatever that is. In this case, it's at 1265 to 1213. And we'll take that distance and then just project it down off of the hop. So the whole pattern scenario, under any circumstance, in a large way, from the maximum tolerance, fails below that 12,160 level. That's how we think about it. Again, it's for the first early entry because we're adjusting stops. But if this was to roll over, fail, not respond to the zone at all, we would absolutely deem the entire, and that's a 4-hour pattern, so that's a big pattern. Okay, it might seem like a wide zone. I probably should show like a 1-minute chart or 5-minute chart, but even from a larger structural level, That's how we assess it, and we would think, okay, if it breaks below that difference, that whole thing has failed. That's a new way to estimate it, folks. And again, the distance will be different depending on the pattern, no matter what. Let's find a failed situation. Let's look at this failed situation really quick. Let me go to 60-minute time frame and how we look at that. There's NASDAQ finishing up huge. There it is on the day. Okay, and here's a great one. Okay, this is Friday. This is Friday's close. How do we look at this? Well, first of all, it finishes the day at the high, so that's no short opportunity. There's terminal bar. What is up here? Okay, what can we expect from this? Well, look at our indicators. They're still back up in the zone. We did have an HSI right before the terminal bar, but that doesn't really link up with what we're looking for in terms of ideal amplified or RSI behavior. In fact, look at RSI just consistently hugging up here that extreme. That's a sign of strength. We talked about that yesterday, of how that behavior really is indicative of how strong that can be. And until this stuff gives us a full another test, and I feel even with HSI that this is going to come all the way back into the zone and retest the hop level, we will probably get another HSI test. And that's what? That's at least what, 80, 90 from current levels. That's how I would look at that. But if I'm going to assess that whole thing as failed, as this is developing, okay, and we'll talk about this week in the gold sessions, but I would look at it like this. Take that distance from the 1618 to the hop. I will assume that 60-minute pattern fails when it breaks above that 13,350. And I'll do you one even better. Here's even a larger structural way to look at this technique and apply it so that we can really know if something's going to be a blowout scenario or not. And let's look at this. Where'd it go? Oh, let me bring this over here. Let's look at this pattern here. We have a potential on the daily chart. NASDAQ has a big pattern at 13.6. Most of you know that. There you go. It's a deep crab. And I have been talking about this pattern since November. And we've been targeting 13.6 in an aggressive fashion because of the formation, and also because I mentioned yesterday we have HSI, a lot of bullish signals. But what happens if this thing explodes? And I'm not saying it's going to. I mean, the market's pretty extreme at the moment, but the way that I would look at this is we will get a hop level around 14,000. And this is a daily level. Okay, and I will still target this up to the 14, use the pattern. But if it's going to fail and some kind of larger insane scenario is going to take shape for the NASDAQ, I will just take that distance, and the hop is around 14,000, project it above it, and we can guesstimate at this moment and say, hey, NASDAQ 100 gets above 14,400, 14,500. There's something much stronger happening, and that pattern's failed. That's the way we think about it. We'll do some more tomorrow on some shorter term time frames, but it's been, really, there you go. There's a 1 minute time frame. There's a crab pattern that came in late. Okay, and again, look at this. Here's the distance between the 1618 and the hop level, and then project that up off the hop like that, and that establishes your top end range of essentially where this whole pattern can be considered flawed or, well, failed. It is flawed right here. And this is a good one because take a look. there's ideal confirmation, okay? HSI, the sun arrow comes in right there. Then we get our confirmation. The trend is pretty aggressive. I mean, Friday was very aggressive. But what happens here when we check back? Because this is a great one, and this is where I'll bring in the dome depth of market, because there's a few things here where I'm looking at that and I'm sizing up, and it's a good one to look at this. This is a flawed pattern right off the bat, but my assessments are spot on with, I'm here at the terminal bar at 13,041, 13,041.50. And I assume I'm looking for my reaction as my first move at 13,023, roughly close to 20 points. Okay, my hop level, that's at 48.49. So there's about 8 points right there. And we do have confirmation, but take a look at the individual bar action. This is something that we talked about yesterday. Where do we have bearish action here? We have the terminal bar, and the little twist that we provided yesterday was that we would wait for this retest of the terminal bar at a minimum. So then instead of looking at executions here, we're more like over here, and we're looking for a bearish candle as well to set us off. Final piece is we look at what the indicators are doing. We have HSI, yes, and that just triggered the first time about 5 bars later. We just look at the indicators. Indicators are not out of the zone. Those are signs that this is going to require a little bit more time. In fact, RSI finally comes out over here at the hop level. All right, and there you finally have triple confirmation up here. And even with triple confirmation, this is a great one to look at because it has everything you want to see, but still fails. Why does it fail? Well, you get a counter HSI signal. Look, the arrow, the pink arrow, 4 bars later says, I'm going back up. Sorry, but not this time. Even on your check back, okay? You could have taken that and said, all right, 1350, 1351, right above the hop. That's an ideal scenario. I'll do you one even better. One of the things that we look at a lot is the trend line. And I show this in the gold sessions where we want to wait, look at the trending move up into that zone and execute to the right after the trend line breaks. Okay? Even in this little reactive move, the fact it went sideways for this amount of time, that's a troubling sign. That's not what harmonic patterns do. The other thing is that we get another counter HSI signal. So these are warning signs that flash. And especially on the first time, this is still the first time it's completed because we haven't even gone to target 1 yet. So all of our strategies up here are aggressive. We manage that tightly, and if we get things that go against the pattern, we respect those warning signs. All right, there's a lot going on there. We'll look at more of that tomorrow. But again, that's the coordination, and that's a great example of coordinating all the elements and still requiring management. It just goes, that's the definition of a dud. It just goes sideways. And it goes sideways. Here is the confirmation. Okay, and you are 5, 10, 15, 25, you're 30 bars back by here. You don't have to risk much to see if you're wrong. That's the point. And you shouldn't have to. You shouldn't be going through any substantial losses on any setup. If you're getting too much drawdown, you're not positioned in the right place. Couple more. When I trade options, Are my stops tight, as in 1 bar trend line or minor violation? The thing with the options is this, on the weekly options, all right, you got to be willing to probably lose, I would say, 50% of the premium if you're buying an option for 50 cents or $1, something like that. If it doesn't work out, you're going to know it's going to work out. You're going to have to scratch that, maybe lose half that premium. But you're trying to capture the reaction, and probably something to feature in this live in the session. But I've been talking about options on like Palantir. And Palantir is a stock that has a great Gartley right now on the 4-hour time frame. And it still went through this week of doing a check back type 1, type 2 on the smaller time frame. But take a look at this. There's the Gartley. And I put that out earlier this week. Okay. And all we got was a reaction up. Now I'm going to see, and this is happening right now, I still think we will get a little bit higher because we haven't triggered our amplified, or if you break it even to 60 minutes, probably better to look at. Okay, there's the Gartley. There's a type 1. And I'll know real quick, I'm still holding a bunch of these, but they're dated. But the thing with that is, do I take the reaction right now and cover with a small profit and look for the retest? Okay, and this is a position we've been talking about for the past, the past week. So what's going on up there? Well, you've got 1, 2, 3 confirmation. That's pretty strong on the hourly basis. Okay, so that makes me defensive. The other thing that I see here on Palantir is the fact that we have an RSI, we have complex structures, and this will likely have to be retested. It might not happen immediately, but I guarantee you come Monday, if I don't see this thing explode out of the gate, I'll probably cover those and look for the retest. That'll be the type 2, and that would be where the larger move could really take this stock. So this is one of those high flyers, but it's a perfect Gartley. Okay, Bob's asking about how to scan. So here's the thing about the scanner, Bob. And again, this is why everyone needs the Pro. They need the Pro version, and they need the HPC Lite. Everything that we do is based off of these programs. And let me open up the scanner here. Hold on. And I'll open up, and I'll walk through how I go through the monitor, and we look at the number of bars here. Here you go. So here's the monitor watch list. This can be done for any of your favorite markets. I think it's really effective. I like to do it for on the 5-minute scans, for 5-minute pattern matches, especially for like NASDAQ 100 stocks. For your currencies, I think the longer term time frames are really good for directional bias. So you have an idea of what patterns kind of targeting where it will go. But go into your scanner, and the scanner is mostly the same on all the Pro platforms. The reason why on the other HPC Lite platform we can't have it is because the script will not accommodate. So that's why I recommend getting a Pro version with one of the main platforms. MetaTrader's probably got the easiest day to hook up. This is working off of eSignal. So let me bring this back over. We want to change our time frame. Okay, hit edit, and let's go up and bring up the 5-minute and hit apply. You're going to get a lot of day trading opportunities like that for your whatever markets you're looking at. Currencies are great, futures are great, and just change your time interval, hit 5 minutes, scan through. I would even select the ABCD because the ABCD is giving a lot of great inflection points. You're seeing a lot of ABCDs complete with other patterns. So hit that as well. And then go through your scan here. Here's all of your major labels of what's the status. If it's immediately completing, you'll see a little icon there. What's the potential pattern? So good to know the direction. I'm looking at number of bars. So think of this within the type 1 and type 2 framework. Okay, how many bars? What's the magic number? 30. So a lot of times we're going to see the type 1 reaction happen in 30 bars and then go to type 2 retest probably a little bit more than 30 bars. So let's see if that holds true here. We've got a crab, deep crab, Gartley here on the Aussie yen on a 5 minute. That's 78 bars ago. Let's see what happened there. I'm on the fly with this, but let's just see what that. Go to the 5 minute. And that was 78 bars ago. Okay, so let me clean this up and we can take a look at it. That was a Gartley 78 bars ago. So this one actually didn't quite work out, but it shows you again, it's still in a type 1, type 2 framework. Look at this. And I would look at that level. Maybe I would look for a retest if I was looking for a 5 minute opportunity on Monday, Aussie yen, but it still follows your ideal type 1, type 2 framework. And I'm more so looking for situations that are down at the hop level. I think I highlighted this last week, how to look at those hop prices. Let me bring this up here. There it is. So check it out. Here's terminal bar. Let me get a bigger one. There's terminal bar, folks. This is a currency market. This is Aussie yen. Remember everything we've gone through in these sessions, type 1, type 2, terminal bar, confirmation, okay? And then even our little stop loss assessment, okay, our estimator. Check it out. Let's just estimate really here. This for a 5 minute time frame, this might be a great way to go to understand really where to place your stops on currencies, but guesstimate this difference, terminal bar to hop. Okay, about 8. Project that down. That's your structural limit. And we have an HSI down at the hop. Now this is an ideal type 1, type 2. There's your type 1 up to target 2, but again, we go from terminal bar, we look for HSI to terminate that reaction. Now, check out what happens here on our first test. You have RSI and amplify, but no HSI. Okay, you got a successful reaction, but no HSI. Again, most of those situations, you're only going to get a reaction. Not a bad trade, but I would prefer to wait for HSI at the completion point, and then you get it down here on the retest. That's the preferred scenario. That's where, look, you got 1, 2, 3. And remember what we were saying about W formations coming out of the zone. Look at amplified, gives you a little complex structure, and then even gives you another W construction here as you're breaking above the 50 limit. That is significant. Those are little signs that tell you you will at least get a reaction back up to your target zones. That's the way to kind of look at that indicator progress. 1 or 2 more. So, right, presetting, you mean the depth of market. Let me do that. Let me really quick. So here is a typical depth of market, folks. Unfortunately, we're not running because markets close and it won't post the feed until we start at 6 o'clock. But let's get into this week in the gold member sessions. But what I want to show everybody is how to preset this. This is pretty standard. I'm working off the Ninja platform on their depth of market. It's pretty good. Some of the other ones are have really good functionality as well. But what you want to look for is go for your settings. And right here, okay, on their depth of market, you hit the drop down window and you can preset your settings at specifically how many ticks off of your entry that you want to stop and how many ticks off of for the profit target. So let me bring that up. Where'd that go here? Hold on a second. Hold on. There it is. All right, let me bring up that information window. Thank you. So here's the custom strategy management parameters. And what we want to do, let's go back to that last one in a second here. I'll go back to NASDAQ. We want to do that guesstimation on the hop level that I talked about. And we want to set the profit target exactly at the profit level, whatever that is, off of our execution zone. So let me bring this up. Take a look. Let's go back to that NASDAQ. Here's that NQ. We'll go back to the pattern from last week. Here you go. There's the crab. Here's the crab pattern. Okay, and let me bring up the automatic levels, especially when we have type 1 situations. We want to have that automatically put in. I'll say this too, when you have news announcements, they're great to trade, but you have to have your limit set or you're not going to capture the move. That's the whole thing about the type 1 situation. You have to capture that target 1 level. There you go. So here's the crab pattern, and here's the way that I suggest setting this up. You're trading futures, regular contract or micro, doesn't matter. We're targeting at least for half up from terminal bar entry, confirmation entry to target 1. That's around 12,500. Okay, terminal bar is 498, traded as low as 90. Somewhere around that 500 level is where this pattern would be screaming to me. And we've got about 60, 65 points at stake. So if I go in there and I want to preset that, all right, and I have the hop level. So, okay, what if this gets crazy? What if something happens and the market gets crazy and goes against me? Because that's your number one protection that you need to think about when you're first clicking the button. Not that you're going to get stopped out, just that you're protecting yourself with a wide stop that you're going to move immediately. But when you first enter, you want that set wide enough where they don't run your stop. You have a little breathing room because our expectation is this thing should develop out of the zone after giving us our confirmation signals. So if we're going in here, then that difference is 60 to the top side, 65. And then on the bottom side here, about 35. Pretty good risk to reward. Think about that. 65 profit objective, 35 maximum risk. That's a nice, more than a 2-to-1 static stop loss ratio. And if that number is at least 1-to-1, okay, your risk is going to be fine. because we're going to adjust our stop losses and our management will go and our stops will be moved as we get out of the zone and we get closer to target one. Our first job is to get out of the zone. I started this session explaining that. Once we get out of the zone, then we're on a really fine focused level of a bar over bar continuation to our target. And then we move this from there up. That's how we handle the management situation, especially on the first time. But you have to set that automatically. And so bring in your settings and you can program that. Where'd that go? Let me bring that back here. You can program that automatically before you go into the trade. So then all you have to do is establish move the stop loss limits. Let me bring this up. So here it is. So whatever your setting is, go into the custom move to edit that. In this case, we'd want to select points, not ticks. That's also important. Ticks or pips. Ticks are, there's, for NASDAQ, there's, 4 ticks per point. So do that math, 120 ticks versus 240. 4 times what, 64? 240, 260 something. But I would set that at, let's set it at points. Points or pips. So it's 30 points, 35 points automatically. Oh, get back there. 35 points. And it's good that I'm just lining this up because not only of the exercise of how to set this and how to think about it, but the ratio of what your projected stop loss is to your profit target. Okay, and your profit objective would be you go for 65, like that, and set that. Once that's set, then when you click the button here, it'll automatically place the order. And again, tomorrow when we're live, I'm going to pull that up and we'll look at some opportunities that way. But that's what you need to do. That's how to think about that. That doesn't differ if it's stocks or if it's currencies. You still want to put that wide stop. I will say this about currencies. If your broker runs your stop, let's say you have a really wide stop and you get run, leave the brokerage because they're stealing your money. I see it a lot in currencies. Couple more folks and we're going to wrap up. How well does this enable a trader to ID long-term directions, say on daily patterns like stocks, Amazon, CRM, FDX? Well, there's 2 ways to look at it. Okay, what are the signals developing? I mean, the long-term signals, it doesn't matter. They apply the same way across the board. The framework applies the same way, and it's just on a longer-term time frame. I mean, here's one that we've talked about for a while. Here's Disney. And let's go on the weekly. This unfolded perfectly, okay, in the type 1, type 2 framework. Here, let me bring it up. Here's Disney on the weekly. Where'd it go? There it is. Yeah, on the weekly. I think that's even on the monthly too. Big deep crab. I'll remove the butterfly. And that's perfect type 1, type 2. Now it's a type 2. Okay. I talked about this, I think this summer, of the fact that this was, and I've got some charts on Twitter posted months ago from this very phenomenon, recognizing there's a type 1. That's on a weekly basis, guys. Okay, and what are we looking for after the type 1 move? We're looking for HSI between the two levels. That's where it hit. And look, perfect. I mean, perfect check back on the weekly. Not only did that end the type 1 reaction, but that set up for the type 2 return, this retest, and it exploded through. So if you're looking for a short opportunity, well, there's no confirmation. The price action's overwhelmingly bullish, and look at your indicators. Those are all three in the overbought, but they're quite a bit of ways before they even confirm. So for long term, yeah, same methods, same set of expectations, same questions. Couple more. Hey, Marcus, the question about gold, let's answer directional market questions tomorrow. I like gold. I'm looking for a long in gold. HSI settings, they're all same as default. Platinum, let's look at platinum tomorrow. Okay. I think there's been a lot going on. So, Bob asks, why not buy if in a failed pattern? And you can, Bob. I think Disney's a great example. Disney, all right, is this a buy? Is there an opportunity to buy? Well, it's still going up, and it's going to be a while until these indicators roll over on the weekly. So to answer your question, if that's going to fail, all right, show me some 5-minute bullish patterns up here. You know, what do we have up there that, you know, there's a bat, there's a bearish bat, but look, okay, there's a Gartley from Friday. So if Disney's a really hot stock, why wouldn't we look for bullish patterns on an intraday basis? That's a great point. We would. Why not? Tim asks, is the hop in 1618? Is it the hop in 1618 or terminal bar? It's the 1618. It's whatever your XA measurement is. If you're doing the estimation for your pattern, it is the distance between your XA leg and your hop, not terminal bar. Okay, that's important. It's going to be a wide range, but it's what your initial stop is set at, and then within 2 or 3 bars, you're moving it. Dimitri, hey, how you doing? How can you make a forecast for stock move for a week to buy a call or sell a put on a correct strike? Well, we do it within the framework of whatever pattern I'm looking at. Here's one that I've been playing a lot of options on recently, which is Riot blockchain for obvious reasons. I've been looking for 5-minute patterns, guys, and just buying these suckers up. That was Friday. Okay, that was Friday, and there's been a few of these where this one has just been explosive. Yeah, look, and there's another bat. That was the one from last week. 16 to 26. Okay, and we play our weekly options the way that I do it. Like last week, I'm down here at the hop level. I'm thinking this thing can go from 16 to maybe 17 or 18 bucks by Friday. It exploded. That's how I play weekly options. I'll talk more about that in the Gold Members session tomorrow. Kevin's asking that the NT charts fall behind. They get slow in fast markets. I don't know. We do have some NT users in here. Send me a chart and let me know, Kevin. I'll help you out with that. All right, folks, listen. This was the session that brought it all together, right? I think you guys see it more clearly now than ever. I've never put it together like this, like I have. So I want everyone to review the sessions, start with our identification, look at the execution, and then bring it all for our management. Because again, I don't care what methodology you use. It's all determined by management, because management, it dictates profit loss. Wherever we close out the trade will determine our success or failure. So we need a framework. That's why I have the framework. The framework gives us the minimum objectives, and then we utilize those minimums until we break out. And again, I'm glad you brought up the option comment, because this was a great example for me last week, where I'm playing a lot of my positions for minimum moves. And when I get the big moves, they're usually obvious. They blow right through my minimum targets. That's the way to think about it. And then, when I get those runners, I'll manage them accordingly. But I'm still waiting for patterns. I mean, this Riot blockchain, this is a great one too, because I'll tell you what, I hit that on some options and closed out. I'll look for the retest. Maybe this comes Monday, tomorrow, and look at 24 for then this thing to go, because it's a type 2. That's what we do. Type 1, type 2. So that's what I have for today, folks. I will get everything posted and get the resources up to you on the Gold Members page. Thanks, everybody. I appreciate all the participation. We had a great group, and we'll get everybody followed up. Let's take some more questions tomorrow in our Gold Member session. I'm taking a break. I'm going to have a nice evening. I hope everyone else has a great evening. We've got a fantastic week to look forward to. So get ready. I'm ready. We'll see you tomorrow at 9 a.m. Thanks, everybody. Have a great one. And as always, go get them.